What is going on, everyone? Welcome back to another video. Try to make this one rather quick. Not a whole lot to discuss, as today's whole trading day resulted in a whole lot of nothing, a bunch of fuckery, and me just getting absolutely smoked. So if you'd like to stick around to hear about my poor trading, which tends to be the theme this year, stick around. We'll go over our double distribution day. That was a triple distribution day. Our failed attempt at an outside day up after opening with a gap down. And we'll go over our daily chart to kind of update the daily, as I'm going to keep this market in balance since we only took out 44.19 and stayed above it for, less than a full half hour before coming in and this market liquidating back to basically unchanged from what we did yesterday, where we just chopped around this 4,400 level. I don't think it's unhealthy that the buyers continue to trade in this 4,400 level, but I don't think they got what they wanted to when they attempted to push up on this day with multiple distributions, only end with two distributions and a rather weak looking profile. These last few days have been probably the hardest days for me to trade. Every trade that I've gotten in has, for some reason or another, has gotten, especially after 11 o'clock, 11:30, the trades have just not been there. I've just gotten absolutely smoked on everything that I do. So maybe we don't trade anymore after 11:30. I don't know. Especially, I'll go over it all here in just a second. So let's review here. So this is the 30-minute chart we are looking at. We opened below the previous day's low day, right? We're still in balance as of where we opened up at, right? We opened up just below the previous day's low day, which was kind of unexpected. I believe it was, I don't even know, some stupid ass data that came out, and the market decided it wanted to liquidate and push lower in the pre-market, only to be taken back in B period once A couldn't push down any lower, holding the gap, right? We filled the gap in A period, couldn't push any lower to get that 10Y point of control, which should have been easy if sellers were truly in control, and they were not. Even B period gave it a shot, got back below opened below the opening. Could have gave it a push to take out A's low and begin to one time frame down to get that 10Y point of control. They couldn't do it. Got back above the open, and that's all she wrote. This market decided to squeeze and squeeze hard, getting all the shorts out, or any short positions that were in early on, getting out, and obviously any of the long positions that were up here, they gotten out in the pre-market or just below it. So eventually we miss getting the overnight low. We rotate higher, take out A's high. We begin to one time frame up in this market. Once you got back inside the previous day's range, there was a vacuum from 43.77 all the way up to 44.01. So it was a great risk reward long to get, if once we began to hold single prints, maybe you buy around 88.25 to go and get that 10Y point of control, because at the time we were one time firming up and you were holding a set of single prints. And so we did. We continued to try to grind up. We eventually went trend again in D period, holding another set of single prints after getting that 10Y point of control. Above that was the next destination, 44.14.25, 17.50, and 19, our balance high. That was the target for the next time frame, right? If buyers really wanted to get going, this was their opportunity at an outside day up. We have now established 3 wide here at B's high, right? It was here at A's high, point of control. Then it got moved up to B's high, point of control did. So because we got 3 wide, it created that second distribution. So your first distribution was here, second was here. Now we're going trend, attempting to create a third distribution. We create our third up here which didn't hold very long. We eventually created another set of single prints in E period, only to get taken back after taking out the those previous high days, not getting much more into that gap back from. So we still have a pretty good sized gap from where we got to today. We're 23.25. That gap gets filled at 46. So we still got a lot to work on inside that gap. The 50-day moving average was hovering just above around the 27 level. So, we got 4 points within that 50-day moving average and backed off rather aggressively as we came back in to fill the set of single prints. Now, for me, this is where I got in trouble. After we pushed up and hit these destinations and got into the gap, I began to get long on this pullback, thinking, okay, we have gone, triple distribution potentially. We were looking to move point of control from B's high here at 94.25 to moving it up to 1350. All right, because we had came in and we were looking to get it anywhere from between 1350 and 15. Right, I was looking for us to initially hold this low of 1350 here, but we came back into the single prints. I was like, okay, maybe all they want to do is either get into the single prints and rotate back up to get 1350 in the next time frame and get 4 wide up here, bringing point of control up, and then establishing that next distribution to come up and then potentially filling that gap, right? If buyers are really strong, that's what we should have done, right? But instead, we continue to pull back once G period opened up, right? Because you got A period, B, C, D, E, F, G, H period. Once H period opened up after G closed, we were battling here between 07 and 12 for quite some time, actually. I'd taken a few longs and gotten out of them, but I initially started my position way too soon around the 44.12 level because I was looking for us to not really push into these single prints too much. And at the time, liquidation really wasn't that heavy. And the 144 simple moving average at the time was creeping up. If we're looking here on the 1 minute chart, as we began to pull back in, simple moving average was right around that 07 level. So I was looking to add, as we got into the single prints and around that 144 simple moving average, which I like to use a lot of times here recently, has not been reliable for the long, but definitely for the short side once you get below it. Anyway, so I was getting long in G and in H period in this area around 010 or 08, 012 or 44.12, 44.08, adding to my position, looking to hold that simple moving average, and I was looking to add into 44.75 if we filled the set of single prints. Now, one thing that should have been a nuance to me was the fact that we didn't, if buyers were truly strong in G period, we should have just pushed straight up and gotten 4 wide immediately at 1350. We missed it. We pushed up to 44.12, couldn't get a point and 2 ticks higher to get 4 wide to establish that wide point of control up here. Instead, we brought it back down to B's high and held it there for the rest of the day as this market just kind of grinded back lower. And I should have definitely gotten out once I see we got below the 144 simple moving average and couldn't hold back above it. I should have just stopped out for a small loss and then potentially flipped short, because at that time the market had gone from one time framing up to one time framing down, right? We were one time framing up A, B, C, D, E, F, and G. G was a reversal bar, putting us into a balance, and then H took out G's low, starting the one time framing down process. And that's what we did for the next 4 time frames. We went 1, 2, 3, 4 time frames down, and then came back into a balance to close out the day. So obviously I was long, pretty good size around the 44.06 as we came in. I had my stop here at 44.01. I moved it like a dumbass to 43.98.75. I was like, okay, maybe they don't. Maybe they push down, fill this small set of single prints. We hold a double distribution day, and then we rotate back up. Nope. After liquidating down into that area, I got stopped out obviously as this market pulled in pretty good all the way to the low of the afternoon, and getting into the other set of single prints, the last of the day of 83, what is it, 83.50, and then bouncing up pretty good back to that 4,400 level. So I think I had the right idea. Risk management was not there. Should have gotten out sooner. I was discussing with one of the guys in the trading room. He messaged me, and I basically said I gotten in too early. My FOMO got to me. I didn't stick to my stops, and I paid the price. I think that now, from now on, need to be more patient. Enter closer to a previous time frame's low or high, depending on the type of day, for a more defined stop and less risk. No longer rely on the 144 to trade off of, especially when we're one time framing down. Now, initially the trade when I pulled back into here, right, to the 144 at 07, that should have been the trade. Instead of getting long 12, I should have gotten in 07, and I could have scalped out for a couple points. That's all I'm looking for these days is a couple points, and I should have been satisfied, right? Even if I had taken the trade again in H period against 07.75, it still bounced up, and I could have gotten out. And then if I would have taken the same trade, after the single print fill, taking that trade in I period, saying I get long 05, looking to come back up, right? And then my stop is the previous time frame's low at 04.25. I only risked a point, right? And now we look to see where the market goes at that point. Is that a key level for me to get short? Maybe to get back down to B's high because we couldn't get there. That is what I should have been thinking about instead. I put myself in the wrong position and got hurt. So yeah, let's mark these destinations, go over the daily, and hopefully you guys, I know I'm certainly going to be rewatching this to kind of re-gauge what in the heck I was thinking on that position, what I could have done better. I mean, I already kind of know what I could have done better. So we end up with what? 1, 2, 3, 4, 5, 6, 7, 8 wide. Nothing of significance there. 8 wide, but we have been putting in a lot of time around this 4,400 level. So is this acceptance, or are we going to find that maybe 4,400 level isn't where we want to be at, and we rotate lower later this year? So there's our high of day, 44.23.25. That is going to be our new balance high, because I think we just stretched it. If the buyers were really strong, they should have pushed back up and closed above and even inside that gap. However, they failed. So maybe tomorrow, if they get above it, then we'll begin to call the daily one-time framing up. But for now, I'm going to keep it in balance. And that's how we're going to look at that. We have single prints that start at very small, but 83.50 single prints start here. I got a massive headache. This weather change is getting to me. All right, single prints then fill at 78.50. And that will be the upper portion of your lower distribution. I dislike this tiny keyboard sometimes. And then we have our low of day here at 65.75. So here we have it, folks. Ugly ass profile, ugly way to end the day. So our upper distribution is 44.23.25 to 43.83.50. We open up inside this range. You look to take out 44.23.25, get into that gap even more so, potentially above the 50-day moving average, and begin one time framing up on the daily. Right now we are in balance, and we're going to remain in balance until something changes with good confirmation. We have single prints that start at 83.50. They fill at 78.50, which is the upper portion of the lower distribution. And the low of day at 43.65.75. If we open up below the set of single prints and in this lower distribution, you look to take out 43.65.75. If you're a seller, you want to get to 43.59.25, where we failed to get to today, which is that 10Y point of control from the 13th. And then the low of day at 43.40.75, which is our balance low. So balance high, 23.25, balance low, 40.75. Now let's go ahead and look at our daily and update that bad boy. Another thing is, I should probably point this out on the weekly as well. We'll look at that first. Weekly, we just stretched our balance high in the weekly. Same in the daily, but weekly balance high was at 19. So far this week, we pushed up to 23.25. We just stretched it right now. So if by the end of the week we don't make any higher highs, then we will have just stretched this weekly balance and the market will remain in balance. Hopefully we get some type of resolution. And you know the funny thing? I did not notice this until right now. Holy cow. Previous balance low, okay? This week's low back from August 28th, the previous balance low was 23.25. I shit you not, we pulled up to it to a tick, that previous balance low where this big candle is, right? Where we came out of with pretty good aggression and tempo to the downside. 23.25 is that previous balance low, and we got to it to the tick today and rejected pretty aggressively. So maybe that is going to be some type of nuance in the future if we don't set any higher highs. Is this where we load up the boat on the short side? Who knows? We'll look to see if we get any type of continuation to the downside on our daily, which we're going to look at now. But keep in mind, weekly, we've just stretched it. So if we don't set any higher highs, don't get above 23.25, the weekly will remain in balance, okay? Look at our daily, and then you can kind of see that within that weekly balance. We'll look at the daily within that weekly balance. So here's our daily within that weekly. Look at how we push up to that to the tick on the daily time frame, right? The 50-day moving average is hovering at 26.67 or 26.50, however you want to look at it, 26.75, hovering right around that level. So I do think maybe we still remain in some sort of balance between the 50 and the 20-day moving average until we get some type of true push one way or the other. I think maybe the catalysts that we're waiting for are going to be the earnings coming up, as earnings season is around the corner. I don't think that should really play a factor, but right now maybe it is going to be the canary in the coal mine. Maybe we get some bad earnings, which causes this market to roll over. But mark my words, if we do not get above that 23.25 level and back into this previous balance, finding acceptance, right? If we do not fill this gap and find acceptance back into that balance above, this market will roll over and go and test our weekly balance low of 42.51.25, and our 200-day moving average is at 42.59. Okay, so if we do not find acceptance up here this week, and we come out of balance to the downside on our daily and get back below the 20, you will visit that weekly balance low and you will test the 200-day moving average. So look at the daily. Daily just stretched that balance high, so we're going to move this up to 23.25. So there you guys have it, folks. 23.25 is the line in the sand for the buyers. You want to get above that, right? Sellers want to defend that. Buyers want to get above it and find acceptance into the gap and above. So hopefully we get some type of resolution. If you guys stuck through my rant, I truly do appreciate it. And once again, I couldn't do all this or have any of this knowledge without my mentor, Paul. So definitely go give his channel a check. Paul Asmar, great guy, camelbacktrading.org. Go check it out. Catch you guys later. See you.